if you are a law firm owner or you work in a law firm in the accounting team and you want to see or learn how to record a retainer from a client for work that you haven't performed and do it in a way that is compliant with the state bar, stay in this video. We're going to go just through that. We're going to record our retainer and initial deposit into QuickBooks Online, and then we're going to take money from the trust account into the operating account for work that has been performed. So without further ado, I'm going to share my screen and I'm going to walk you through the way I would do this. All right. So here we are on QuickBooks Online, and one of the very first things that I want to talk about, and this is like a prerequisite that you should already have. And if you don't, go ahead and create it, which is having two separate bank accounts. You want to have your main bank account, and this is basically for money that is yours. Money that you can use for payroll, money that you can use for marketing, for legal fees, for anything related to your business, whatever you want to do in your business. This is yours, all right? And also here is where the money is going to go for work that you have already performed. And this other bank account, the IOLTA or trust account. This is specifically for money that your clients give you for work that you are yet to perform, that you haven't completed. All right. So these are just two bank accounts for money that is yours, for money that's not yours. And then we need a liability account because otherwise, how are we going to balance the debits and credits? So we're going to have the trust liability account that is going to mirror the IOLTA bank account. So if any money goes into this, we're also going to mirror that, putting money into this. If money comes out of the bank account, then we're going to mirror that into the liability account. The same amount is going to go down in this account. And I'm going to show you how it goes. It's going to make more sense as you see how it works, as you see the magic. So now let's go ahead and create a new client. Let's say our client is going to be, think of a name. Um, I don't know, Charlie Harper. Let's create this new client that has paid us a $5,000 deposit. So now we're going to create an invoice for that initial deposit that should go into the IOLTA trust account and into the liability account that is going to mirror everything that happens into the trust account. All right. So we're going to go ahead and create a product and service that is going to be a sub account of the liability account that we already talked about. All right. So let's go Charlie Sheen. We're going to name Charlie Harper. We're going to name it the same as the client. And this is done because you're not going to be opening a new bank account for every client that hires you. You're going to have one account and you're going to pull all of the payments over there. But the way you're going to track how much each client has put into the IOLTA account is going to be with these subcategories that we are creating right now. So let's go ahead and choose service. And here, category is going to be on the trust liability. And it's not going to be an income account. This is not money that is ours. We want to create a new sub account. So I'm going to name it as the same as the client, Charlie Harper. And we are going to add this. And QuickBooks is going to be like, well, what type of account is this? This is going to be a current liability. It's going to be like a trust account. It's a detail. And this is a sub account of trust liability. So this is we are going to be able to see how much each client has into the trust account, and we can balance that out later. So we're going to create this, save and close, and now we have our trust liability account that is mirroring the IOLTA bank account retainer for $5,000 that is initial deposit, and we're going to save this. We're going to receive the payment. Let's wait for QuickBooks to load because it's been a little bit slow today. Let's say it was a check. And we're not gonna go into the operating account. Now, if you want to pull multiple payments into just one deposit, or you are using a software like Gravity Law or Law Pay that pulls all of the payments that you receive in a day into a single deposit in your bank account. You want to go ahead and choose undeposited accounts, but for purposes of easy and time simplicity, we're going to go ahead and choose the trust account for the whole $5,000. And now we have recorded or retainer. That's how you create a retainer. All right. So you go ahead and you create your client, you create your product and service, and you're going to create it as a subcategory of the liability account. The liability account is the one that is mirroring everything that goes into the IOLTA account. All right. Now I can show you what happened on our chart of accounts so you can see the balances. Now you can see our IOLTA or trust bank account went up $5,000. Now it's reflecting that initial deposit. And also we have $5,000 on trust liability account. This is mirroring the trust bank account. These two should always match. And another video, I'm going to show you the times that they don't match and why is that. All right. And we can see the sub account of the trust liability. We know that Charlie Harper had put $5,000. If Mr. Musk, which is another client that we have, was to pay $2,000, the trust liability account will go to $7,000, and we will see the breakdown of $5,000 for Charlie Harper and $2,000 for Mr. Musk. Now, let's go ahead and earn money from the trust account for work that we have performed. We're going to go to customers, and we're going to go to Charlie Harper. Now, what we want to do is create an invoice. Now, this invoice is just going to reflect the money going into the income account. So two things are going to happen. This is a two-step process. First, we have to create an invoice. In the invoice, we're going to affect the, oh man, the income account and the trust liability account. Let me show you what I mean. And I'm going to show you why it's a two-step process, okay? Oh no, we have to first the income account to reflect money. Let's say charge for legal work completed. And this is going to be for, all right, this seems to work. This is going to make our income account increase for $2,500. But this is not going to take any money out of the trust account. Neither is going to put any money into the operating account. All right. All it's doing is increasing our income $2,500 for legal work completed. Now, what we're going to do right here is use the trust liability account for Charlie Harper. Pretty much the same. I mean, actually, I don't think this needs any explanation, or we can put the same explanation minus $2,500. And this is going to take the money out of the trust liability account. So we have increased our income for work that we have completed, and we have decreased the trust liability account of Charlie Harper. That is the first step with this invoice. The second step is to move the money from the bank account for trust into the operating bank account, because here we're not doing anything to the bank accounts. All right. We're not even going to make a payment because it's going to net out as paid because of the balance zero. Save and close. And we're going to go to the chart of accounts so you can see exactly what I'm talking about. You're going to see that this is still the same. It's not reflecting the money. You haven't transferred the money from one bank account to another one, but you did reduce your trust liability for the money you earn it, and you increase your income. Where is my income? Where's my income account? Income, income, income. What am I missing? Legal work. Okay, why is it not showing? You should be able to see the 5,000 here. What mistake did I make? Ah, QuickBooks, doing your slowness. Okay, here it is. The balance is $2,500. All right, you scare me, income. I don't know why you're not showing your balance, but all right. And that is the first step. Now we have to transfer 2,500. We have to reduce this by 2,500 and we have to increase this by 2,500. We're going to do that with a simple transfer. Where are my transfers? Here they are. And we're going to transfer, as we already mentioned it, money from the trust account into operating account. It's going to be an ETF check. Oh, transfer amount. Okay, it's $2,500 and it's going to be um charge legal work completed for Charlie Harper. This way it's going to be easy to spot. Save and close. And now look at that. Would you look at that? Now we have the money transferred from one bank account to another one. And as I said, the trust liability account is going to mirror the trust bank account. And now they have the same amount. So that is it. That is how you record a retainer into QuickBooks, and that is how you take the that is how you charge a client for and you get the money from trust. All right. In the next video, we are going to look into how to record the interest that you earn for having money into the trust account because the trust account is going to it's going to bear interest and those interests are not yours. Those interests are going to be paid to the state bar and I'm going to show you how to do this in the next video. All right.